following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. Getting ready for New Year's Eve here. Hope you guys are got some good plans on the table and watch the gumdrop fall or whatever is happening in your town. I think they have an acorn here drop. I'm not sure in Raleigh or around Raleigh. I'm not in Raleigh anymore. And how about the Oracle of Omaha's track record this year? They're starting to make light of that. He stuck with IBM a little too long, and a couple other things. Long-term investing may be over. As we all know on TFNN, you got to be nimble on your feet, and you've got to, in my opinion, listening to the guys on this network. And as Steve Rose has said many times, this is becoming more and more of a stock picker's market, and I think he's dead on. So what we're going to do initially is we're going to surf the globe a little bit here, look at some currencies, the usual suspects. We're going to take a look at a couple of stocks, some out of the scanner, some out of the actually out of the Dow 30. A couple of names that have been in the news lately. We're going to take a look at those and see how to wiggle out of them or wiggle into them based on what your investment profile is. A lot of guys have these Dow 30 stocks that are in their portfolios that they don't manage, and somebody else is managing, like a Oracle of Omaha. And it may be time to start taking more control of your portfolio in general. Let's take a look, first of all, at the XLE. A couple of big names kind of run the show in this particular ETF. The thing we have talked about is we've got a new profile attempting to appear here on our long term on the XLE. I was reading a comment from JB here. Fisher cat. Yeah, that's a crazy. I mean, that guy had some crazy stories about that animal. It was almost fearless and could climb trees and do all kinds of things. Anyway, so the XLE, we're looking at a new profile attempting to appear. It's obviously held up a little better on a relative strength basis than crude oil in general in the past since it's made lows in August, and we've kind of done this double, triple bottom thing, but we just don't want to get off of it this time. And crude oil has broken some folks' hearts this past week again. Here's the daily on the XLE, and we're kind of sitting below profiles again on the daily. It's been a lot of nervous actions here in some of these oil stocks, but we're going to get into those a little bit after we take a look at crude oil relative to this. So let's just take a look at the February contract in crude oil. And we talked about, it would be much better to start selling breakdowns. We talked about this yesterday, in fact, and not buy support here on the bottom of this 3682. I know that new profile is attempting to appear on the XLE, but again, this is not the type of action you want to see on a long-term basis. You want to see it get away from those inflection points, and you're kind of seeing it sell off of this resistance, unfair high on our daily again with a little bit of noise factored in. So I'm not a big fan of buying crude oil, and I think the XLE is obviously going to head lower. We may have a little bit of a resting point with that long-term profile that may appear here, but that yellow, remember, could flash off, and I'm going to show you this really quick. As we go into our futures section, on our scanner, we're going to pull up, we're going to go to crude oil here. We're going to see that bottom, and we're going to see it just slightly below. We're going to see that arrow down, which tells me that we've been in a defined downtrend relative to profiles for 8 straight weeks. A little bit of a, uptrend in some of these other ones, but, that's the main thing I'm looking at on crude oil. And when we go into the XLE really quick. Let me get back to my ETF section. Well, actually, let me go back to my dashboard here. That's where we're going to find it. I think this is where we're going to find it. Yeah, right there. So even though you see this yellow peel back starting to happen on the XLE on the weekly, that could disappear. It's just giving you a hint that a new profile is attempting to appear. That's got to stay yellow until Friday. If the XLE starts changing tone a little bit more, you might see that disappear. That's why we cannot track this in our breadth charts. And I talk about all the time, when we start seeing more new boxes attempting to appear and that yellow part of our speed dial start to get more populated, that's an indication in itself. And I'm doing the educational videos before January 4th. I promised it. I'm going to hold true to it. I'm just waiting for some of these charts to get finished in our scanner. Programmers are all over the place on the holidays here, but that's why we cannot track historically this peel back. And I wish we could, but historically, one of the things that has to happen when you do back testing, if you guys do any back testing, is it you really have to have closes of events to really say, okay, I can rely on that. I mean, you can't. A lot of people will get on TradeStation, and I mean, I've seen it more than anybody in my life in the world probably, because we had a lot, really nice systems at one point that we were focused on, that people leased, and a lot of these, and we had great success with those, but a lot of these people will create systems, do the back testing, show the results, and see how everything worked out. But a lot of times they're optimized, and they're optimized because they're taking the what if scenario on some of these moving averages at crossover and things like that. They'll do entries on these back tested results that are really based on best case scenarios. As a moving average crosses, I would have got in it earlier because it crossed, and I knew it crossed early, and it just doesn't work that way. So when you do these flashes in the pans on real time and then they go away, what if the moving average had crossed back above, and therefore I wouldn't have taken the short, and they never would have taken the loss? So it's kind of a similar situation here with new profiles attempting to appear. That's an indication real time, and it's very difficult to track that back testing wise. So that's why we don't, to get to my point again, and as you know, I'm very good at belaboring a point. It's very difficult to put this in a historical manner. All right, so let's clear that out. Let's resort. Let's go back to the dashboard. And we talked about crude oil a little bit here, so you know my feelings there. I want to hit the S&Ps next. Actually, what I want to do next was hit the Canadian dollar really quick, because we talked about that correlation. And it seems to be still holding true here. So here's the long term, nothing new there. I still think this is one of the best trades on the books. We've come down. We've used this 138.12 as support. I think crude oil is going to head lower, and therefore the Canadian dollar may get devalued more. So that's still a decent relationship. Here's the U.S. dollar. Talked about trading that off of 98, giving it a little noise level. It's starting to move up. I'm starting to feel even better about this, getting above 98.32. Let's hit the S&Ps now. Let's see where we're at. Here we go. Somebody's just messing with my list here. Oh, damn it. I'm on the wrong one. Sorry. Here we go. Got two servers going on here for this. Okay, so obviously we talked yesterday about, I'm not exactly super excited about buying this above 2057. Missed out on that trade. But the good news is it kept you away from doing any shorts up here yesterday, because when we rattled around and came off 2057, that nice inflection point, we crowded it, and I was not a huge fan. Yesterday morning, we were actually trading above 2057 as the time of this show. And I was like, you know what? I'm not a big fan of buying this again. A lot of the profiles in the underlying instruments, as we looked at them in the breadth charts, were still, primarily mainly in the balanced area. That kind of became more disconnected yesterday, but we've still got almost half the stocks in the S&P sitting in the balanced area on the daily. And on the weekly, why did I do that? On the weekly, it's even more of a similar situation. So, is trading light? Are stocks mostly still in the balanced area? Yeah. Are we sitting on the highs of the year again, almost on the S&Ps? Now we are. But as you look at this, and as we talked about it yesterday, this is a daily. The good news is it kept you out of the shorts because there was no reason that you could get into shorts above 2057. Okay. So passing on longs and not being able to short is something, not a bad thing, even if we have a huge move up. Now we've got to be looking at 2057 as support. And we talked, one of my favorite trades is to kind of get the breakout, then, buy the high probability situation or break down and resistance back up into these inflection points. And now you've got a ton of things in your favor here on the breadth charts. And we've had some volatility. It's been nerve-wracking for me. These inflection points hold up very, very well on the dailies, particularly. We do a lot of automated trading systems based around these daily inflection points. So right now, this looks very damning for the shorts. It's the end of the year. You've got some probabilities that we're going to continue to edge up here in 2057. More than likely is going to have to be a waiting area to buy support there. Let's see. Got about 40 seconds here before we get a break. Just want to cram this in if I can. Notes. Talked about this one. Talked about 126 not being opposed to buying that. That was a stop out. Now you've got to just sit tight on the notes. I mean, I don't have a crystal ball. We got to play probabilities. That's one of the ones where I personally got nicked on, and now you've got to just sit tight. If you're thinking about shorting this, you've got some reasons to be able to short it now. I'm just not a big fan of shorting treasuries. The S&P's obviously with that inverse relationship, traditional inverse relationship, bonds sold off, and that 126 areas, based on your appetite for risks, was definitely an uncle situation for me. All right. We're going to come back after break. We're going to hit a couple of more futures, and then we're going to get into some stocks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We're going to talk about hitting a couple more futures before we get into some stocks here. Natural gas. I might have just got this email. I'm pretty bad about checking my emails, but somebody was asking about this. We talked yesterday about the February contract, this 2.303 being, at least an area to take some profits off the table. If you guys have been long, since I know some people in the den have been talking about buying this thing for a while, but we talked yesterday about, turn the rents the same way. This is resistance on the way down. You got to pay attention to that. Had a little bit of noise above that area, and you always got to give yourself some room. I think we went as high as what yesterday? 2.386. So that inflection point, 2.303. Again, natural gas is relatively expensive to trade. And by the way, if you're trading this on a short term, these 240s, we had this 2.296, 2.303, very similar neighborhood. Inflection points on 2 different time frames there that we kind of poked our head up. A lot of times you get a big run up and you get these people, okay, God, we're breaking out of the long. I mean, this is really an area you have to just kind of take some off the table, wait and see what's going to happen, and don't get too excited about missing a possible big move. You got some big kind of headwinds in the way of natural gas going higher. I know you guys know that, but on the very short term, I want to point this out. This is true in the scanner for a lot of different things. If you go over here, you see this 3. If you guys are trading short term, you can pay attention to the long term inflection points, but you can also, in my opinion, day trade based on the 60s. I mean, these are, we've been breaking below 60-minute profiles, 16 bars in a row here. Got some short-term reasons to maybe take some of that trade off, but as you can see, here's here's the way this works. We come back and retest, and then the short term kind of takes over here. It's nice to see how this works out. It keeps me out of a lot of trouble. So 2.303, where's the possible buy point in this? I actually don't think this is something, unless we spin around up here and compress against this 2.303 and don't come off of this in the next couple of days or week, or maybe a week and a half. You want to see these things not to get, if you want to try to buy this particular situation, you want to see it not fall away from these inflection points. You want to see it spin around up here and consolidate. So right now, I'd like to see a new daily, if that's the case, I'd like to see a new daily profile up here. I'd like to see this thing consolidate within the daily balanced area and compress against that weekly unfair high to even think about going long this. I'm not a big fan of going long natural gas. I'm kind of a big fan of just turning the rents the same way, selling this 2.303. And if we can get back into the 2 area and we have a new daily profile up here, which the scanner will tell you all this. There it is. We'll see some new information start to appear here. Then I would be a fan of, on a short-term basis, being able to pick some up, but that would be getting back into the significantly into the weekly profile. The short answer is not right now. Okay. All righty. We're going to take a look at McDonald's really quick before we get a break. On a long-term basis, this is, obviously one that's been showing a ton of relative strength. This is kind of really amazing to see this stock do this. But, at least, when the market was having a lot of issues and rattling around, this thing hung in there like a champ, 114.99, let's call it 115. And now going back to the daily, just to take a view at this, somebody sent me an email about this too. Is it time to short this thing? No, it's not. This thing is showing every connotation of a strong stock in a market that's been going sideways, and you got way better shorts out there. And don't try to be a hero and try to step in and possibly get filleted trying to think something's too high. That's a big problem for a lot of traders is, oh God, it's gone too high, it's gone too low. There's no confirmations that it's okay to get in the water on the short side on this, and there's actually every confirmation in the world to me just to sit tight and wait for new support on this stock. Remember, taking that attitude, back in what is this, beginning of last year or beginning of this year. I hear the music. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I think we'd finished up with McDonald's. We'll just move on. There was one stock in the Dow that was down yesterday on price, just down relative to price. Disney. So we talked about the sickness here in Disney. We've got a new profile here. 105.35 is the unfair lows. But we talked about this thing ultimately at least getting back down to 102.83. This, a rally like yesterday, it kind of clarified a lot of things in a lot of stocks on the short term at least. And Disney, man, you just have some people that are seemingly wanting to get out of this thing on any market help type rallies. And remember, you got arbitrage programs that are, kind of bringing some of these stocks together with big market moves, high beta situation stocks. And that just, was something that an exiter, if you will, type investor wanted to just use that on a day like yesterday to get the heck out of this thing. So again, nothing having to do with the scanner, nothing having to do with anything else. This is just raw relative weak trading. That's the situation there. Man, we got to take a look at this one. We talked about this not showing the signs that I wanted it to show, and getting, kind of passed on the shorts on Amazon now. 684.82. We had just an incredibly powerful move up recently in 2 days from about 660 to 693. So we had, what was that, a 5% move in less than 48 hours in Amazon. Now we're trading above 684. The reason I'm picking this up, I'm not, we talked about how this thing wasn't exactly acting the best way in the world to start picking off shorts on this again. We did have some action from that 684, but we talked about passing again, how this is crowding up again against this 675 and then 684. But the reason I'm bringing it up is, the XLY in general, I've talked about a lot of the other players in this particular ETF. Amazon's the only thing keeping this thing up, in my opinion. And the XLY, in my opinion, is still something to pay attention to. I know we had a kind of a sympathetic move up yesterday, but I think this is starting to show some relative weakness in general. And you're definitely offered opportunities. Even, we had some kind of take off the table type opportunities down here, and the markets dragged this thing back up. But you've got some opportunities, again, in my opinion, around that 80.61, 80 or 80 to 80 and a half. Let's just say that. I think you've got some opportunities. Why? You've got a relatively wide profile on the daily. You've got that POC around 80 to 80 and a half with that unfair high on the weekly. So Amazon, obviously a big percentage of this particular ETF, but it's starting to show some cracks in the armor, even more so, in my opinion. This is a little bit more of a scarier trade. There's obviously better shorts out there, but I think if we get any help whatsoever from the market, this thing could come apart at the seams and see 72 pretty quickly. Yeah, Terry, I hear you. I just read the Den. Yeah, I mean, Disney, Star Wars. There's a couple of very clear signs going on in Disney right now that there's something wrong there. And if you don't think a lot of other people are small-time investors, whatever, retail traders are in there trying to buy this thing because of the star. I mean, there's a lot of people taking advantage of them right now and preparing for kind of a whoosh sound that possibly the smarter crowd will ring the register on. Let's take a look at gold here. We're going to take a look at gold and silver. We haven't hit those. I'm not a fan. If you watch this show, I'm not a fan of trying to pick gold off on any of these bottoms down here. We're consolidating and starting to see low. This is our weekly, starting to see lower highs on the weekly and just kind of compressing down in this 1060 continuously. Pass on buying these things around 1060, except for just general short-term trading bounces. But when we get if we get a weekly close below 1060, it's going to start freaking some people out who are holding gold, and they're going to say, "Oh, why would I want to hold it when I know I can probably buy it back at 1,000?" So we're going to have a lot of that thought process. And here's the daily. There's been zero reasons to really start looking at this thing from the long side. This is unfortunately something that, in my mind, is we don't have we have a normalization globally. I mean, I have a lot of programmers and farm those out in another company. The normalization of labor prices and the way, who knows what the numbers really are in China, in the U.S. I mean, you can't really trust them too much, but just the feel that I get, and I do a lot of traveling and kind of know what the landscape is on global labor. You can go to Odesk, you can go to a lot of different sites and just pick people up globally. This will be incredibly foreign and not possible 10 years ago. But because of this normalization of labor, we're basically kind of trying to figure out who's going to do it cheaper. I know you guys already know this, but going back to gold, this is something that's extremely anti-inflationary, and with the commodities getting bashed to heck, I mean, this is not a good setup for gold in general. Let's take a look at silver. This has even been a relatively weaker situation, and we talked about this on a relative scale versus gold, and now we're below 14. And Larry was even talking about this yesterday. I was listening to him. It's just not a lot of good signs here. 13.96, 97, getting below there. This is another breakdown and close below and go retest. And with gold giving it some help, silver may just do the biggest throw-up move that it has seen in a while. And remember, before we turn around in a lot of these, there's no free lunch. I mean, before we turn around in a lot of these commodities like the silvers and the golds. I mean, it's going to put the pain, and I'm sure Larry can comment on this too. It's going to pressure people to the point where they have to make a really serious decision, and that's when things usually turn around. And a lot of times those decisions are, can I afford to keep holding this? And a lot of commodities, you'll see these crazy moves up before they turn around. Gold's no exception to it, and crazy moves down before they turn around. That just hasn't happened in gold or silver yet, and that's the scary thing, because there's a historically, probability-wise, good chance that maybe gold goes to the moon to 2,000 again, or even higher. But a lot of times it will get everybody out of that trade before it reverses, and that's just a general trading comment. Kind of seen that movie before type situation. By the way, I never ask people to call in, but feel free to. The numbers are on the website, and I'll give those again in just a second. I'm sure Al's going to type them in because I always he always supports that idea. The dollar's moving a little bit higher, guys. Pre-market here, still going higher. Let's take a look at 877-927-6648 for folks in the U.S. Internationally, 727-445-1044. So 727-445-1044. We're going to take a look at, we looked at Amazon and Disney. We're going to take a look at another. I want to take a look at the XLF really quick. Bond situation, note situation. Haven't been a big fan of selling this, but not really super excited to buy this. And a lot of bank stocks are kind of languishing around like, well, we did a quarter point. Growth is so not a big fan of even playing around with this sector. Here's the JP Morgans of the world kind of coming back up and rattling around these inflection points where at the end of the year we could drift a little bit higher. That's just the way it goes at the end of the year. But not a big fan of everybody just kind of getting on their stock buying bandwagon at the beginning of the year. I think people are just going to be going, where do we go from here? A lot of unknowns, no clear path, and these bank stocks, going back to these and the XLF, are going to need to see growth, and they're going to need to see that yield curve possibility, widening situation. So, I just don't think these are things that you even play around with right now. I don't think you're going to get a lot of bang for your buck throwing capital into it. Remember, you got to also spend mental capital on these situations, and I don't talk about that enough. Mental capital, stress, energy, time devotion. Just you got better things to put mental capital towards out there. Also, we're going to take a look at Caterpillar really quick. All right, so not too long ago, we had kind of looked at this coming up into this inflection point. I know there was some news on Caterpillar and being able to trade off of this because it was a downtrend resistance topic or pick off the scanner. Caught some points off of it, and then we had the news-driven thing, and that's kind of where all bets are off. So we caught a decent move off the scanner pick off of that, but we now are rattling around above this daily profile and actually kind of closed above, came back and retested it. I don't know why that. Oh, let's see. I have to remind myself of things so things pop up. 67.85. This is obviously something now. Even though the targets on that were still the unfair lows. Now we've got a new profile, and Caterpillar has the possibility of retracing back up into 73.56 now. If that happens, then you've got a maximum just place to hit this again from the short side. But right now, that's not possible. I'm not a big fan of buying Caterpillar right now. This is kind of a wait and see. I'd love to see it actually move higher to try to whack it again. We're going to take a look at General Electric. This is something we never really pull up, but I want to pull it up because we've got now a weekly breakout happening on General Electric. And if I go to my scanner, go to my dashboard, go to my sorts, that I think, Let's see here, breakouts. We should have General Electric. We have got a lot of breakouts on here. There's GE, one of the candidates, one of the rules here. And you guys are going to get this charting version pretty quickly with all the new things in it. I just want to make sure we got all the bugs worked out. We will get it to you before the first year. I guarantee that. Thanks for bearing with me. So General Electric, we see that 1 there, and that means we've gotten clean and clear of all the noise on the weekly. And man, there's a lot of stocks breaking out, huh? Here's the stocks breaking down, by the way. EOG and Zion out of the S&P 500. So I'm going to show you what we're surfing through here, S&P 500. If I wanted to add, by the way, currencies, futures, don't have a lot of those right now either. But as we look at the S&P 500, I'm going to go into, I'm going to finish up with GE really quick. This is obviously one that dividend driven, the whole 9 yards as far as that goes. But this is one where, you've got a really, really relative strong stock here. And, there's no reasons to short this. General Electric is doing this for a reason at this stage. Let's take a look at this one. Is that the one? Hold on. EOG, let me look at that one here really quick. Yeah, I don't know. Maybe I've Zion. I don't know. I'm gonna have to relook at Zion here. I may have a charting issue. I think the scanner is usually right. EOG. This is one. Man, teed up on the short side. Should have been cooperating with the market moves up. EOG, you've got a short stop area above 72.94 on this based on your appetite for risk. This is one that, again, one of the only stocks acting like this in the S&P 500 right now. And I'm going to check on my charts on Zion. There's something wrong with my charts because I'm sure the scanner is correct. You write that down. We're running all of our scanner stuff off a hardcore database. We're going to take a look at Johnson & Johnson. That's another one I had on the radar screen. All right, so again, these are relatively strong stocks relative to profiles. They didn't show a lot of volatility, and this is our weekly view on Johnson & Johnson. Didn't show a lot of volatility on our weekly view when all that noise was happening, and now it's kind of shown itself now as 102.49 is going to be support on this now, and that's the way you're looking at Johnson & Johnson. We've also got some cooperative effects going on, 103.61, also getting above our daily profiles. Okay, so Apple, we're going to hit Apple, the NASDAQ, and UTX when we come back. Those requests out of the den. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. I'm going to see what's going on about Zion. Our guys are looking at that right now. Apologize for that. Apple. We're going to hit Apple, NQ, and UTX really quick. So, again, the long term on Apple, I think people are following me again. The long term on Apple, again, not to buy, showing a lot of relative non-strength here, even though we had a kind of a pop-up yesterday. Again, I think this stock has got issues. The price, it's all in the price. It is what it is. It doesn't have to go higher. It doesn't have to go lower. It is right where it is. This is where buyers and sellers have decided this is where the stock needs to be. And then we popped our head up. I wouldn't get caught up in buying this, even though on a daily kind of breakout there. Remember, you got this 104.29 area that still hasn't been met. Could consider that being met with the noise factor there. But again, not acting well. Remember, the market, this is what, 3% of the S&P 500. It's a very big component. It's a huge component of the NASDAQ. Let's take a look at NASDAQ really quick based on that. So I'm not a big fan of buying Apple down here, put it that way. Here's the NASDAQ, obviously stronger index than the S&Ps on a relative strength scale. You can see how these long-term inflection points have acted here, but this was runaway freight train yesterday. So just like the S&Ps, we've got, that 2057 area. We've got in a very similar fashion 4648 on the NASDAQ. I'm not again, historically drift up at the end of the year, all that stuff we talked about before. a lot of these indices, like we talked about on our breadth, are still kind of stuck. That the internal instruments are stuck. Oh God, let me go back to my indices here. Daggone it. Where's my NASDAQ? Here we go. So as we look at this, let's go to our weekly. A lot of the stocks, over half the stocks in NASDAQ are still in the balanced area, and so is the NASDAQ on the long term. I don't think you've got a lot of leverage here, even though we're very, very positive. I think the buy point on this one is very similar to that 2057 on the S&Ps. That's 46.48 again. I think you cannot buy this up here. Can you short it? I just don't think, think you need to take off probably and not trade heavy for one thing, but just if you're going to mess around with this, you got to wait until we pull back to 46.48, and you've got about a day and a half here left before the end of the year. So I think you ought to pass on this one. Let's take a look at UTX. Don't see a lot of leverage now in the NASDAQ or the S&Ps unless we pull back to those numbers. All right, so looking at the long term on UTX, if you can see how these profiles really, really help on the long term, this is our weekly. It's very powerful. These are in the scanner. I'm going to go to my UTX. And as you can see, we've kind of been in a defined so-called downtrend 28 weeks in a row. We did pop our head above past couple of days above the dailies, but let's just look at this. These are these inflection points that have been in force. Remember, these things are in force. It's not like they're adjusted or I do them manually. Not been the strongest stock in the world relative to the S&Ps, but if you'll notice, see how these things kind of pop up and then pull back. This will be on the radar screen on the scanner. We popped up again. Again, got a couple of day and a half left here. The targets up top on this would be 99.09 right now. But again, I think you've got better buying opportunities out there than UTX. Guys, you've been great. Larry's next. Stay tuned for all the hosts on TFNN. Have a good trading day, and I guess I'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.